We would like to welcome the senior management team of Godrej Consumer Products and thank them for giving us this opportunity. I would now hand over the call to Prateek for initial introductions. Over to you, Prateek.
Thank you, Ashit. Thanks everyone for joining us today to discuss the quarterly performance and the current business environment. The company is represented by Ms. Nisaba Godrej, Chairperson and Managing Director, Mr. V. Srinivasan, CFO and Company Secretary, and Mr. Samir Shah, Head Investor Relations. We'll now have Nisa share her thoughts on our performance, and then we can open up for Q&A. Over to you, Nisa.
Thank you, Prateek. Good evening, everyone. I hope you and your loved ones are safe and healthy during these difficult times. And thank you for being with us on this call today. In Q1, GCPL's performance was resilient. Our overall sales growth was nearly flat and EBITDA grew at 3%. Profit after tax also grew at 3%, excluding exceptionals. As you know, 85% of our global portfolio is household insecticides, hygiene, and value for money products. These grew at 9%. Household insecticides and hygiene combined had excellent growth at 20%. While value for money products declined, we have seen sequential improvement from April to June and remain confident of stronger performance going ahead. I had previously pointed out that our Indonesia business is very similar to India in product category and strength of its P&L. And as an economy, actually, Indonesia seems to be stronger than India at the moment. I'm happy to report that both India and Indonesia, which account for 75% of our overall sales, grew at 5% each. In India, primary sales mirrored secondary sales in absolute terms, and rural grew much ahead of urban. Our performance in Africa, the USA, and the Middle East was weak, but we have seen sequential improvement from April to June. And Dharnesh Gordon, who is our new CEO of the region, has already got his hands around the business, and we had a strong July, and we remain committed to a turnaround in performance going forward. One of the biggest growth pivots for us has been the resurgence in household insecticides, which grew at 27%. We are reaping the benefits of a very strong innovation pipeline and product portfolio serving consumers at all price points. Consumers are also, at a time like this, extremely concerned about their health and, insect-borne diseases like malaria and dengue. So we are also investing more behind consumer education on disease prevention. We have been laser focused on growth and innovation in our hygiene portfolio, which grew at 15%. I'm extremely proud of our teams that we were able to cut down new product development cycle times from months to weeks, and we will continue the agility we saw in launching 45 products. I'm also happy to share that our teams have been on top of their execution game, and I believe we were agile in responding to the supply chain shocks that we faced. We are using this crisis as an opportunity to digitize more rapidly and grow more strongly in channels like e-commerce and chemists. Working capital days came down by 6 days, and net debt to equity ratio also came down to 0.17. As always, our values matter the most at this time, and we are committed to the safety and well-being of all Godrejites and serving our consumers and communities with our full hearts and minds. Thank you. We take questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, congrats on good performance in the HI. Some questions I have on that is one, how has the illegal incense stick industry done now? Do you have some total data there? And second, any impact of out-of-home consumption in HI because people are not going outside? So these two are the main ones. If you could also highlight how much is the contribution from the new products launched in the last 1 year in HI?
Thanks, Abneesh. Thank you for your question. So I'll take the question on illegal incense sticks. So I do definitely believe that illegal incense sticks are impacted for a couple of reasons during this time. I think one is, as we've seen, that all of us have had supply chain issues and, keeping our factories running and, getting the right logistics, transport and stuff. So I think, and costs have gone up. So I think they have adversely been impacted by that. The second piece, which you might know that's happened, is that the duty on raw bamboo sticks which come in from China or Vietnam, the duty has been increased from 10% to 25%. So this makes their business much less profitable or more unviable. And I think the other pieces, which I've also been messaging about, we have also got a lot more aggressive in terms of pushing them back, whether it's, educating consumers, the PR media we're doing, or through, the government and legal means. So I think some of that's been playing out, and we will make sure that we use this time to just fully push them back.
Yeah, so one follow-up here. Bamboo sticks, higher duty, can they shift to the domestic bamboo sourcing? And does it impact you also in terms of that duty structure?
You can. Yeah, it would impact us also. But incense sticks, is a very small part of our business, our HI business. And we have other products like Fast Guard also. And we have some new launches that are going to happen in this area. But I think my understanding is that, yes, you can use Indian sticks, but their bamboo is not of the same quality, which makes it challenging, and the cost would be higher.
And my other questions on new products in the last 1 year and out-of-home consumption, how that has been impacted? Okay.
Yeah, I think to begin with, Abneesh, we have had a meaningful contribution from Goodnight Gold Flash Liquid Vaporizer, something which got launched regionally to begin with last year, and then we scaled it up. So it has had a big contribution to overall HI sales as well as growth. I think out-of-home category per se, has been a relatively small play. And over last 2-3 months, the consumption has been relatively lower as compared to the recent past years in terms of growth rates.
My second question is on soap. So Dettol in their presentation claimed, global presentation, that they have become number one in India. So how do you play in this segment? Because Dettol is almost like a generic to that segment. Of course, Protect also can play there, but in FMCG, new brand takes a lot of time. So if you could tell what is the right to win for Protect here, and have you lost any market share because Dettol has become number one, or is it a loss to rest of the players?
So Abneesh, I think to begin with, our scale up in, kind of Protect, kind of health soap has been very encouraging. That's something which got launched during the quarter, and we do expect even a meaningful scale up of it, over coming months and quarters, and expect it to become very integral part of our, soap portfolio to, begin with. We don't share market share details, right, Abneesh? So to that extent, it would be very difficult for us to at this point in time call out that, how the share, trends have been. Also, the details coming in, directionally on market shares are still, not marrying in with a lot of internal, data points. So to that extent, we do feel that, our market shares are quite stable. But I think the task for us would be to ensure scale up of Protect soap as well as continue with our micro marketing initiatives, which over last 2 years has resulted in very meaningful, share gains for us.
My last question is on hair color. So when do you see growth improving because of the work from home continuing? And second is, how much is the percentage coming from salon and barber shop? Because again, people are using the trimmer, etc. They are not going to barber shop, most of the consumers. Specific impact on B blunt, because my sense is that will be much more salon sales. So could you discuss all these?
I think both our B blunt and professional business of niche are, very small and sort of very insignificant. The professional business has definitely been impacted. From a B blunt point of view, that is not actually sold in salons. That's sold in retail from beauty shops or online. So, that will have a different sort of trajectory. I think what we're seeing with hair colors is obviously we have seen some amount of sequential improvement, but also what we've realized is that from our consumer research, men seem to be a little bit more shabby at this time, or willing to be shabby. No offense to any of the men on the call. But women still, want to color, and they say, we don't want to sit around at home, not looking sort of good. So we do, and then we have these value for money products that are well distributed and stuff. So we'll see what happens. But this is not a category where the bottom is just totally falling out.
Thank you very much. Sorry to interrupt you, Mr. Roy. I'll request to come back in the question queue for a follow-up question. Next question is from Arnav Mitra from Credit Suisse. Please go ahead.
Yeah, hi, good evening, and congratulations on a good result in the context. So on the HI business, this 27% growth is clearly a very exceptional number. So, as people go back to work and spend lesser time in home, which would be happening in June and July, what is the kind of growth rates you've seen sequentially in these months? Are you seeing it settle down at a lesser rate, or do you see the trends continuing to hold up at a very high growth rate in the immediate term?
Well, I think it's too early to call out, Arnab, at this point in time, whether, the trends are continuing or we are, kind of settling down, because it's very, very, kind of dynamic as we speak. I think what we have to understand to begin with is there has been a strong reason to buy from a consumer perspective, which has been, disease prevention. And we expect at least that trend to, sort of continue. And we would be investing, in fact, on that platform aggressively to ensure that, that reason to buy is very much intact and the growth rates are, kind of steady. In household insecticide category, not just here and now, but, for many more years to, sort of come. We will also top it up with, some of the innovations which we have launched over last 6 to 12 months, and also a few more innovations which could come in the rest of the year. So, no specific reverse in terms of what are the trends. But definitely, I think, we should continue to see sustainable, kind of stable performance in household insecticide category, both in India as well as Indonesia for rest of the year.
And I would break it up into two pieces, actually. I think some of the growth issues that we were facing, correct? Some amount due to this illegal incense stick and stuff. So I think what you will see us is also taking market share. See, we've also been very aggressive in, say this Gold Flash liquid vaporizer. We're not just saying, India's most powerful visible vapors. We've really worked very hard from a technology front to get this product to be much superior, correct? And we saw, some years ago when we launched a much superior LV, sort of how our market shares sort of really grew strongly. So I think one will be a market share both from illegal incense sticks, penetration with some of these other burning formats. So I think, and we've mentioned it, that we have this full play portfolio playing. So that I think is work we've already been doing and pushing forward. I think we're also, for a category like this, is an opportune, it sounds horrible saying an opportune time, but people are very concerned about their health, correct? Just the way that they're washing their hands or using sanitizer and stuff, they do not want to take a chance of getting any sort of sickness and having to go to a doctor or a hospital. So I think that vigilance, which we're seeing across categories, improve my immunity, keep me safe. And I don't think that is just going to drop off overnight. So I think our job as the category leaders to make sure that, we're driving distribution, we are giving customers, consumers the products that they really want, and are also educating them on how to keep themselves safe.
Sure, thanks. My second question was particular to the launches you made or the foray you made into dishwash and toilet and floor cleaners. Now, these are obviously large categories. They have strong incumbents. So how should we see this? Is this an extension of what you have in terms of some brands in a time when these categories are seeing a pickup? Or is it something where GCPL now wants to be a broad-based home care play and therefore has gone through the process of development, thinking through how, what role you will play in these categories? How should we think about these two specifically large categories in home care?
Yeah, I think we are quite a broad-based home care, and, obviously HI sort of dominates the story, but don't forget we've also become, over the last few years, the leaders in air care, very low penetration category with a good sort of headroom to growth. We want to play strongly, obviously, in liquid detergents, and actually these floor cleaners and all, it does seem quite opportunistic at this time, but these were categories that we had been sort of looking at. And the way we look at it in a country like India is, what is the penetration story? Sure, you have very strong competitors in these categories, but we feel that the penetration story here is it is quite opportunistic, and it's a good time both from a penetration viewpoint and what consumers want. Again, this, I want to keep my house as clean as possible, a good time to get into these categories.
Okay, so you would say that this is not just an opportunistic foray, but you would think of developing this as a long-term growth vector for the India business?
Yeah, I think any of these categories we're getting into, it's not just opportunistic. Obviously, look, if you even in a brand like Protect, we know where, what are the products that are really differentiated, where are the products where we have cost advantage or other advantages, and we would probably invest in those. But they're definitely not just, let's do it for 6 months. I don't think that makes sense for a company of our scale.
Okay, thanks so much. That's it, and all the best.
Thank you.
Thank you very much. Next question is from Percy from India Infoline. Please go ahead.
Hi, good evening, team. A couple of questions from me. The first is on the soaps business. Despite a significant decline in Q4, the Q1 numbers in soaps are just about flat. And this is very different from what the market leader has reported. They've reported double-digit growth in skin cleansing for Q1. So just wanted to understand what are the moving parts behind this. Why are sort of Q4 plus Q1 average decline is in double digits? If you can throw any light, any sort of particular geography or any particular brand, and also if you can sort of share if there's any initial signs of this normalizing and we going into a sort of strong growth in Q2 or not?
Sure. Percy, this is Samir here. So I think if you look at our performance, not just last 3-6 months, but again, over the last couple of years, we feel we are very much, heading in the right direction in terms of share gains as well as, kind of our initiatives, which have been largely, micro-marketing efforts, sort of driven. I think going ahead, the strategy remains more of the same in terms of continuing to pick up, kind of one state, multiple districts, kind of doubling down our, 360 efforts to get, kind of strong foothold, eventually market share gain, settle the market, and then, sort of move on. Also in parallel, as I was mentioning earlier, we have launched Protect, health soap, which we think, should be a meaningful play for us, sort of going ahead. Not reading too much into the recent past performance per se, as well as July, which honestly has been, quite robust and strong for us. But as I, kind of mentioned earlier, it's very dynamic, so we need to sort of take, 1 month, at a time in terms of how, we are progressing in terms of one understanding, consumer behavior demand, as well as, kind of our structural and tactical, initiatives. So we remain quite confident of continuing, the share gain momentum in soap, and also, we should see, kind of much improved performance in soaps, sort of going ahead.
And Percy, in skin cleansing, we would also be in growth. So I think it's also how you bucket what products. We've not moved away from, sharing categories that we have shared in the past. But if you plug in some of the other products like hand wash and all in there, we would be in growth.
Understood. Secondly, just wanted to sort of dig a little deeper on your gross margins, especially in the India business. It's nearly 300 basis points contraction in gross margins. And of course, there is a mix effect because hair colors decline would have contributed some part to that. So if you could just call out what is the extent of mix impact driving this, and then apart from that, the remaining part, what is the reason behind that?
Sure. So I think there are a couple of reasons, Percy, and you kind of called it out. One is obviously, adverse, kind of category mix. During the quarter, we did have decline in hair color category, which is our highest gross margin earner. And hence you would, kind of see, adverse category, sort of impact coming in, which also results in, kind of lower gross margins. The other is also, kind of input cost. While crude has been benign, palm oil prices have been, kind of higher on, year-over-year, sort of basis. And we are in process of taking calibrated, kind of pricing changes to mitigate that impact. So I think it's combination of both input cost increase or a lag between actually, end consumer price and input cost, and also adverse category mix. So my sense is in coming quarter, we should see a much improved, gross margin as compared to, first quarter, driven by, this gap between input cost and consumer price getting partially bridged, as well as much improved, favorable category mix from gross margin perspective.
Right. So I was just looking at the palm oil prices. Actually, sequentially, it has not moved much. And on a YOY basis, I see the inflation is actually higher in March quarter versus the June quarter. So what am I missing here?
No, I think the changes, especially if you look at the input cost, even on a YOY basis, I think in case of, palm oil derivatives are still higher by 20 to 25% per se. And also there is, kind of mix change. See, also you need to look at the weightages, right? We will have different quarters and different, kind of saliency coming in from each of the categories. So, there are too many moving parts to sort of, kind of look into it, and just a plain vanilla comparison of Q4 to sort of, Q1 may not give you, all the answers.
So how long will this margin remain under pressure?
As I shared with you, I think, in quarter two, we will see, kind of much improved, gross margins, baseline with, quarter one's, gross margins.
Okay. That's all from me. Thanks and all the best.
Thanks, Percy.
Thanks, Percy.
Thank you very much. Next participant is Vivek Maheshwari from Jefferies India. Please go ahead.
Hi, good evening, everyone. My first question is to Nisaba. So Nisaba, since we are speaking to you for the first time, post you taking charge as MD, and I do recognize that there is a huge continuity factor with you. Still, are there any areas which which would gain more focus, or the way in which you are looking at the business? Just to give an example, if I drop a parallel, when you started the journey of M&A, Mr. Adi Godrej guided that 10 times revenue over 10-year period. Now I know the time is not right to give those kind of guidances, but how you would be approaching things differently, if at all, given that now you are at the helm as an managing director of the company?
Yeah. So like I said before, I was already at the helm. I think the problem with us has been growth. So my job is to make sure we grow. Now, I'm not going to give you any guidance on that, but hopefully you'll see what we do this year and the years ahead. I think that is very critical that we get back to best in class growth. And I think in our, and I've said definitely, India, Indonesia, very strong businesses, good category portfolios, deep, P&Ls. And in Africa, I think along with Dharnesh, Gordon, we've already seen, sequentially, month over month, things sort of getting back. I think just having a lot of execution strength and making sure that business, both in the, needs to turn around in the short term so that we can sort of realize our long-term dreams for it. So I think growth and just execution will be the focus.
Thank you. That is very good to know. The other bit is again on the HI bit, the 27% growth that you have reported. It, if I go back, this is probably the best quarter that we have seen, in several years. What is, again, I know, you wouldn't want to give a necessarily guidance, but what is the sustainable growth rate? Because like, Percy did, if I combine, let's say, fourth quarter and first quarter together, I get a 2% growth in this business, and there is a bit of a base issue. So could you just highlight what will be, the medium-term growth, target or expectation from this business?
Vivek, hi, this is Samir here. So again, no specific guidance, but the thought process would be to continue with, new product launches, scale up of the recent past, kind of year, as well as continue to invest on the disease prevention platform and look for a more sustainable, kind of stable, sort of growth, going ahead. I mean, see, household insecticides is close to around 40% of our India as well as Indonesia business. So we definitely need to have, this category, firing on all, kind of cylinders. Otherwise, it just leaves too bigger a hole, for other categories to fill in. So the thinking is to kind of double down, on this disease prevention platform, new product launches, continue to gain, market share from incense sticks players, and carry on with this, kind of sustainable growth, kind of for rest of the year. So that's the thought process.
Okay. And just a follow-up to that, Samir, so what you have mentioned essentially is the supply side, a factor. From a demand side, we have seen packaged foods companies, for example, being a natural beneficiary of this, COVID crisis. Do you also think that HI structurally, or not structurally, but medium term, it alters the growth profile of the category itself, therefore?
Yeah, I think like I told you, when I think this was a little bit earlier in the call, I said there are two things, right? I think our innovation machine, what we've been doing, pushing back illegal incense sticks. So I think some of that's sort of kicking in. But I think consumer demand also to stay safe, manage your health and stuff, there's been a big shift in that. Look, now I would love to give you a guarantee of how much that shift, we will, it's like sanitizers or hand wash, right? The baseline has definitely shifted much higher than it was before. Where will it level off? I don't think any of us can guess. I think what we will do is to make sure that all the input metrics, correct, on education on disease, efficacious products at a price point, increasing distribution, low cost manufacturing, all the inputs that we can control, we will definitely control. And like I said, say that this is giving us a moment in time on this high demand and say this incense stick being impacted. So from an execution perspective, we will do everything that we can not to let this moment in time go, which will sort of benefit the, the business in the long term. And I think when you think of HI, we keep focusing HI just on sort of, all these questions will be very sort of India focused. I think one of the things is that we have a lot of category know-how and knowledge in this. So how do we grow exports? How do we use this time, to expand in Africa? So I think we're looking at HI a lot more. Obviously, we have a big HI household insecticide business in Indonesia, but I think you see more holistic thinking also on the growth of the overall category for the company from us.
Great. Good to know. Thank you and wish you all the best.
Thank you so much.
Thank you very much. Next participant is Manoj Menon from ICICI Securities. Please go ahead.
Hi team, some of my questions I reckon is partially answered, but let me just still ask for some clarifications if I may. The first actually, just a medium to long term thought process on likely consumer behavior changes which you are finding in the market currently in HI industry, which would allow you to diversify, or build the non-mosquito businesses. If any.
Sure. Yeah, sure. So Manoj, building the non-mosquito, and hi, and how are you? And good to be on the call with you. I think building the non-mosquito business has always sort of been a focus of ours, and we're seeing say something like roaches actually. And when I talk about sort of disease prevention and educating consumers, so roaches are actually something that are known to increase, health problems for people, to have asthma, to, sort of cause it again, sort of lung related and stuff. So I think it's at this time, it's bed bugs or the other insects, I think is making sure that again, you have the right products at the right price point and then educating the consumer on it. I think another thing, Manoj, that we are seeing is that, pest control, it's quite likely that people will want less pest control, people coming into their house to do this sort of work because at least till this sort of social distancing remains. So some of our, we have this product called Hit Roach Gel, which is a very effective product and actually competes against pest control. So I think we will see, non-mosquito opportunities also grow out of this.
Okay. Now, the only follow-up on this particular aspect here is it something, for example, as a consumer, I'm not sure whether I've actually been exposed to, any of these activities. Maybe it's my ignorance. So is it something which you're thinking currently? Because my question is essentially saying that this is probably, as an outsider or a layman, it appears a great opportunity to build those, categories in a time like this, and then those habits you can build on later.
Yeah, we already have a relatively large cockroach business. We have, our sort of rat products and all have been doing quite well. So we continue to invest in these products. We also had we launched our full natural range of HI products with that we have this amazing fly product in it. If you put it on the table, totally natural. So it can be around food. Like flies won't come anywhere near the tables for 3-4 hours. So I think we have, we have the full sort of portfolio, and we are investing behind it.
Okay. Just two more quick, subplots to the HI, part of the business. One, when I look at the Indonesia overall growth, given the higher salience of HI in that market, as we speak, in the shorter term, is there a different consumer behavior of, the Indonesian in the HI business versus India? And second question is a little forward looking, is in the context of, now Dharmesh, he's been around still since April, the thought process of HI in Africa as well.
Sure. So I think the consumer behavior that we're seeing is quite similar across countries actually. So this, I want to avoid dengue, malaria is sort of very similar across countries. Obviously, people have different sorts of habits. A product category like aerosols is larger in Indonesia as in salience to the category than it's in India, but the heightened awareness of health and more keeping my house clean, keeping my environment safe goes across. I think Dharmesh coming on board, and I have been telling people it might be selection bias since I did select him, but it's awesome to have someone who's so experienced on the continent, is already sort of driving sales and stuff in the short term. So I think for our HI dream, definitely from an execution execution perspective, he will drive that. Obviously, the know-how and stuff comes from GCPL. We have actually had a pretty successful launch in Africa. I actually took out the details of it from the presentation because, more headroom time from whoever in our competition is looking at what we're doing. But I'm pretty confident. We obviously, you all shouldn't believe us till we do it because we've been talking about it for a while. But I do think, we have the innovation capabilities, and I think Danesh will come and really help us drive execution, and obviously not in HI and all the product categories.
Got it. Actually, on the HI Africa piece, that's an extremely honest, statement, and we really appreciate it. And lastly, on the Protect brand, which has been around for a while, which you are dialing up as we speak. Just some more qualitative commentaries on, if you can, on the consumer matrices and the acceptance distribution. Just on the Protect brand, I'm just trying to understand, get my head around, on one end, there is a market opportunity. On the other end, something which has been there in the market. You had some very innovative products, under that brand, etc. And then just some comments on Protect brand and, how do I kind of think about, let's say, with a 3, 5, 10-year view.
Yeah, so I think in Protect, obviously a lot of the, we have products like hand washes. We have the Magic hand wash, which is pretty innovative and stuff. So this is again like a time where the demand is very high for these products. So we're going where the demand is. I think we also feel, obviously there are lots of very strong competitors in this category, correct? If you take a name, say like a Dettol and stuff, it literally stands for hygiene and the category. But we do feel that the Godrej brand name in itself is very strong and stands for trust. We do feel Protect with the kind of formulations, perfumes, innovative products, has a lot of resonance with consumers. We feel that we have cost advantages in some of the product subcategories because, like say in something like aerosol cans and stuff, both in Indonesia and India, where because of our other portfolios, some of the largest producers of those types of products. And then, we will use our sort of distribution, marketing strengths to build up this category. But we will, we've launched a lot of products, but I think our focus will be is, where are we differentiated? Where do we have a good margin profile? So we will sort of rely on our strengths in these areas. And the other thing we're doing, which you might have seen, is also that, say in air care and stuff, we are making sort of category pivots to solve this need of consumers. Okay, I want to perfume my bathroom, but I also want a bit of disinfection. So even in our other categories, we're heightening the hygiene element. Synthol is doing very well. It's always actually been a germ protection. So although we've not sort of marketed it on that basis, but now, we've heightened that on the packaging and stuff. So I think one is Protect, and a Good Night and a Hit, which plays directly into the categories, but also in the other brands, what are consumers looking for at this time.
Understood. And thanks and all the best. And the only reason I asked on Protect is because, I was going through the presentation and I saw a snap of Synthol's, Tamil communication, which essentially what at least I understood, I can read a little bit of that, was it appears to have been repositioned actually as a family, sort of positioning. Yeah. So anyway, so I just and I also recall,
the good. I can't read that as now. I'm quickly looking at what they've put in. But Manoj, Synthol has this is a Tamil ad because the original Synthol is a very strong brand in Tamil Nadu and in little parts of Andhra Pradesh also. And the positioning of the brand there is different than, not different, but it's focused in a different way to the consumer than the brand is in other parts of the country. So that's why we haven't changed the positioning. That's how it's always actually been, the original.
Very clear. No, I think I remember, maybe listening to this 10 years or 12 years back, I think Mr. Godrej talking about I think the old synthol packaging, I think, has remained for some 30, 40 years, if I'm not wrong, right? I mean, so in that part of India.
Yeah. Actually, when we relaunched, and now someone in my team is going to tell me to shut up, but like when we relaunched Synthol, actually, if you look at the packaging and what we did is that we took the whole brand back to the original in terms of the the clean lines and the strength of the brand. So yeah, sorry.
No, thank you. No, that's very clear.
We can connect offline on this anytime.
Sure. Thank you. Thank you so much, and all the best to you and team.
Bye. Thank you. Stay safe.
Thank you very much. Next question is from Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good evening. So my first question, was on the advertising spend. So obviously, if you look at the 45 new launches, it's probably the maximum you've done in a quarter in a very long time. Just wanted to get a sense from you is that, do you see a material step up now in your advertising intensity, or do you still believe that this is more availability focused in terms of, the way to sell the new portfolio in the current context, because ad spends have come off quite sharply this quarter?
Hi, Harit, Samir here. No, I think we will see generally, our ad spends, sort of moving up if you are baselining it with, first quarter, right? In fact, we did see sequentially also our ad spends moving up, but we also saw substantial reduction in CPRP, right? So it's actually going to be a good mix of, higher GRPs and lower CPRPs. And we will continue to invest, not just on, kind of Protect and the new launches, but even on, other categories, whether it be, kind of select part of hair colors or household insecticides as well as, soap. So we will continue to be, in investment mode, but we'll also be in parallel judicious, right? Categories where, we see, back end, or front end, being a hurdle in terms of, kind of getting it to consumer, our ad spends will be relatively on the lower side. Where the demand is, kind of normal, we will, sort of continue to invest. And hence to that extent, we will see step up in our advertisement spend, in coming months and quarters.
So the better way to look at it is a sequential pickup rather than a YOY look, at least for the next couple of quarters.
Absolutely.
My second question was on the promotional intensity part, as it has been with the other players as well, it has contributed to your revenue growth for the quarter. I just wanted to get a sense of, do you continue to see, promotional intensity being fairly low in the marketplace, given there are still challenges in availability. And in that context, this was a driver or a lever you were using to drive some growth and share gain as well. So how do you see that in the current context?
Well, I think it's going to be a mix of, availability as well as, kind of eventual, kind of scalability, from our own, end. So my sense is at least in very, very short term, this may continue. Of course, driven by, kind of a mixed impact also across, categories. However, the larger point is, my sense is we should continue with this, pricing-led growth, whether it comes in from, kind of lower trade, kind of sales promotion spends or, category, kind of mix or even premiumization, right? I think the whole of last year, especially for India, we did see, kind of a mismatch between value and volume. And I think in quarter 3 call, we did call out that at 21 we should see convergence of value and volume. My sense is the way F21 is, shaping up at this point in time, we should continue to see a pricing-led growth with, of course, kind of different drivers to it for, full year, which will be backed with, sustainable, stable volume growth also.
And the last one was on the rural side. I think in your initial remarks, you mentioned that rural has done far ahead of urban. I just wanted to get to, the sense on how you're thinking about the portfolio currently, given that, for the India business, rural is still sub 30%. So how do we kind of capture this opportunity in a larger manner? And what would be the key, kind of categories or products that we're looking at to use this opportunity?
Yeah, I think rural will continue to be a big growth sector for us. Always has been, right? Because not just of, having around 30% of our play in rural, but also because of lower penetration in categories like hair colors as well as household insecticides, right? I mean, these categories have relatively low penetration in rural markets. And we have the portfolio, right? I mean, whether it be hair colors, we have, powders, or whether it be, household insecticides, we have the burning formats. So we have, portfolio to recruit consumers, we have portfolio to upgrade consumers, and we will, kind of continue to build and double down on our distribution also. So rural has been, and I'm sure will continue also to be one of the lead, kind of growth pivot for us, Harit.
Okay, that's it for me. I'll come back for more. Thanks.
Thanks, Harit.
Thank you very much. Next question is from Latika Chopra from JP Morgan Chase and Company. Please go ahead.
Yeah, hi Nisa and Samir. Thank you for the opportunity. My question was more medium term. Nisa, you mentioned execution and growth is the focus for you, and that would clearly support revenue growth. But what are your thoughts on the margin front? Considering over the last few years, though the growth in domestic and maybe for initial few years even in Indonesia was subpar, but we continuously saw momentum on the margin front. So are you willing to, invest disproportionately higher to drive the top line growth and, want to keep margins more or less stable? Or the focus is going to be, still on, profitability is going to be a very key metric for you to evaluate when you take your decisions on the top line?
Hi, Latika. Samir here. No, I think the thought process is very clearly to kind of, drive, kind of sales growth, whether that be, driven by new launches or distribution or, kind of communication, kind of strategies, right? And if we see opportunities of, disproportionate growth, we won't even shy away from, having upfront, investments. But my point is that once you have a sustainable scale, you will see a natural fallout of it being a margin expansion. So it's not either or, to begin with, but at least internally, even as Nisa mentioned earlier, the big focus is, driving growth across categories, across, countries. And I think if that's in place, we should see, kind of margin expansion, not necessarily again quarter after quarter, but at least on a, kind of 9-12, month basis.
Sure. The second bit was in Indonesia. I remember, your chalked out plans around expanding your product portfolio into more hair care categories, post-wash, hair colors. And then, of course, there was this discussion around tapping into more markets in Southeast Asia using Indonesia as a hub. Any color on, the strategic initiatives on that front, please?
Yeah. So I think to begin with, at least over last, 6 to 8 months, the push, in terms of the entire hair care, space has honestly taken a little bit of, backseat, while we remain extremely committed to, scaling it up, because the overall growth opportunity itself in Indonesia is, kind of quite, sort of a big one. So we will, sort of continue to invest on new brands as well as getting, kind of new product launches within the larger, hair care space. Also in Southeast Asian markets, we are exploring, exports, model, and it's not just, kind of plain vanilla exports model, but also model where you have, 2 feet on ground in terms of, kind of creating, brand awareness alongside maybe, strategic, distributor, kind of arrangement who kind of, leads the entire, kind of go-to-market initiatives. So that's also happening, Latika, as we speak at this point in time.
Sure. Thank you and all the best.
Thanks, Latika.
Thank you very much. Next question is from the line of Richard Bio from JM Financial Service. Please go ahead.
Hi, thanks for taking my question. Hi, Nisa. Hi, Samir. Can I request your perspective on what you think is going on at Strength of Nature? The reason I ask is that, this is the third write back of the earnout liability for this acquisition. And of the 800 crore odd earnout that you originally estimated when you acquired it, half of it is already now written down. Can you just help us understand how much of the original forecast for this business has changed that necessitated this kind of a cut in the earnout? And on a related point, Nisa, if I may, with Dharnesh at the helm now, what are the kind of changes to strategy that you envisage for SON in particular, and also for for Africa in general? Thank you.
Hi, Richard. So let me take the first one, and then I think Nisa will share her, kind of thoughts on the second one in terms of strategy. I think we've shared this in the past that, we had, kind of conservatively baked in a higher, kind of EBITDA as well as, kind of eventual financial liability, right? I mean, in the balance sheet for our, kind of, erstwhile, kind of promoter to have enough skin in the game. Right, so that was one thing which we had called out earlier, and also honestly the performance has been relatively kind of weaker as compared to even our own sort of internal expectations, and that's where we are working towards in terms of scaling it up to begin with, kind of driving sustainable growth and also deriving sort of efficiency from the business.
Yeah, and to add what Samir said, I think, the strength of nature business, while strategic to our overall sort of Africa portfolio, because it lets us serve consumers on a full scale of what their hair needs are from, we have the extensions through Darling, and through Strength of Nature, we got all the know-how on styling products, relaxers, care products. The truth of the matter is that we've executed in that business pretty terribly. So I think I think in Africa, I think there's two parts to this sort of turnaround on, both growth and the bottom line. I think one is there are some strategic choices to be made, but I think those are actually, those are not that difficult because we have some good categories. We mentioned that we need to build out something like HI, which is a huge strength for us, and where you find actually not the kind of innovative value for money products that you find in India. So I think so while there will be some portfolio choice making, I think our execution needs to sort of get much stronger, and I think that's where sort of Dharnesh comes in, because his vast experience. He was the head of South Africa sales for Nestle. He was the CEO of Nestle Nigeria. So I think his on the ground knowledge, correct, whether it's from pricing to GTM to how to run the factories more efficiently, and I think that's really what we need to be doing much more strongly. I think the other thing that would possibly be positive, that even while the last couple of years in Africa performance has not been good, we've not been sitting with our legs up, not doing anything about it. So I think from our product portfolio, strengthening the team, there has been quite a bit of work going on. So I'm hoping, not hoping, we need to make it happen. But I'll tell you, taking over the CEO of the company and having a strong operator who knows the markets in and out definitely lets me sleep a little bit better at night. But I think it's to my mind, it's actually more execution than strategy for that business.
Oh, sure. Thanks, Nisa. And Samir, a follow-up on this, if I may. The earnout liability that you originally provided, that has now halved, right? I mean, if I consider the 3 round of write-offs or write-back that you took, does this also mean that your expectation from the business in terms of let's say 5, 6, 7 years profitability is actually half of what you originally estimated?
Well, I think earnout to begin with is more of reflecting the past performance, right? I mean, it's not necessarily an indicator of how the future performance would be. Also, if you see the recent past, kind of financial liability, it's just sort of 6%, if I'm not mistaken. So what it originally was close to around 30%. So yeah, it's more reflective of how the performance has been over last kind of 3-4 years, which we shared that has been relatively lower than our own, internal expectations, but not at all reflective of, what the future performance will be.
Okay, got it. Thank you very much. Wish you all the best.
Thanks, Vishal.
Thank you.
Thank you very much. Next question is from Amit Sinha from Macquarie Group. Please go ahead.
Yeah, hi team. Thanks for the opportunity. My question was on the cost structure of both the India business and the Africa business. Last quarter, you had highlighted that on the cost management side, there will be accelerated savings, at least which you will initiate. Now, I understand that this quarter there could have been some incremental cost coming in from because of the business environment, etc. Just wanted to understand from a year's perspective, how should we look at the overall cost structure, both in the India business and Africa business, particularly when I look at, obviously there is a deleverage disadvantage during the quarter, but even on an absolute basis, I don't see a significant cost savings in the consolidated financials. So just want some perspective there. Thank you.
Hi, Amit. So no, I think we should see, kind of meaningful, cost reduction in, kind of SG&A expenses, right? And across the board, not just India or, African markets, as well in, sort of Indonesia. Yeah, I think in the last quarter, some of the reductions are getting offset by maybe a couple of one-offs, especially in India, which I can, sort of think of. But in absolute terms, we have seen, significant reduction on a year-over-year basis in the controllable SG&A spend across, countries of our operations, and that's something which we will also continue going ahead. I mean, experience over last 3-4 months has, sort of taught us many things that, we can work virtually, need not necessarily excessively, sort of travel and stuff like that. So we are making all those, kind of pieces into our, kind of ways of working going ahead, and essentially that will get reflected in the overall cost, how they will pan out, I mean, for many more years to come from here on.
And you said there is some one-off in the cost.
Yeah, I mean, in India business, I mean, in other expenses, we did have, a couple of, one-offs which were, providing for fixed assets and also providing for one-off customers' balance.
Understand. Okay. My second question is, you have highlighted in the results that there is a sale of certain brands within the group entities. Just wanted some details around that.
Yeah, so this is basically.
Hello, sir, can you hear us?
Yeah, I can hear you.
Sorry, Amit, I'll just take that up. No, so this is basically, kind of intangible sales, I mean, which also happened in the Q1 of last, fiscal year. So it's honestly nothing, different this time around. It's a sale of, kind of assets happening in from SPVs eventually to, Indonesian, based, kind of entities, because it's eventually the assets, I mean, which belong to the Indonesian, kind of business. So we saw that actually, and that creates basically a deferred tax, kind of asset, because we do get, I mean, those tax benefits over a period of time in Indonesia or the recipient, sort of country. It happened in Q1 of last fiscal year, Amit, and it's also happened sort of in Q1 of, this fiscal year.
Sure. Thanks a lot, Samir. Thank you.
Thanks, Amit.
All the best.
Thank you very much. Next question is from Abneesh Roy from Edelweiss Financial Service. Please go ahead.
Yeah, a few follow-up questions. One is how has been the mix in HI? You mentioned India mix overall margins were impacted, but within HI has coils grown faster? Has the lower end of HI grown faster? And is that the reason why rural is also doing much better?
Yeah, so I think if you look at our format mix, Abneesh, within HI categories, we did see very strong growth in burning format as well as in electrics. Aerosol is actually into two halves. I mean, the mosquito part of aerosols did grow quite well. However, we had significant, back-end supply chain challenges in the roaches part of aerosols portfolio, which sort of struggled just because of the back-end supply chain issues. But those have got resolved, and we have seen, again, meaningful growth coming in that part of portfolio also over, kind of past, 30 to 40 days now.
So does it impact the HI margin? So is the HI margin down YOY?
I would say yes. I mean, in Q1, yes, because of adverse format mix, which we had in household insecticide category. That to me, gets more than corrected now in the coming quarter. And also one of the reasons why we will see better, gross margins baseline with first quarter gross margins.
My second question is on capex in India, Indonesia. You are seeing very good growth in HI plus multiple new products. So are you outsourcing these currently, and what would be the plan for insourcing medium longer term?
Yeah, it's very dynamic, Abneesh, to begin with, and there are different models from, kind of purely insourcing or outsourcing, even hybrid ones actually, right? We have historically, shared this that, none of our, categories barring soap, are very, kind of capital intensive, right? So to that extent, even in terms of scaling up or, having new launches, assuming for a moment that we are insourcing it, we do not expect any meaningful, kind of capital expenditure, whether it be India or Indonesia, in rest of the year as well as maybe the year thereafter.
My last question is to Nisaba. So, multinational companies are exiting the fairness word, not necessarily the proposition, but obviously Fair and Lovely and all those. So you do have a soap called Fair Glow. I do see that on Amazon selling. It is not a focus brand. I understand that. But with these changes in the sector, would you scale up in terms of aggression, maybe not just in soap, even in skin creams, medium longer term?
No, we wouldn't. So actually, we didn't invest behind Fair Glow, or we moved away from that brand for the very reason that, other companies are doing that now. We had done it a while ago, and actually even it's a minuscule brand for us. We're actually, sort of changing the name. So we're taking even on the minuscule brand that it is, changing the name from Fair to something else. So no, we don't want to take advantage of the situation that others. I think it's the right thing for the consumer, for us all consumer product companies not to be doing this. So.
Okay, that was quite helpful. Thank you.
Thanks.
Thank you very much. Next participant is Shirish Pardeshi from Centrum Broking Limited. Please go ahead.
Yeah. Hi, team. Thanks for the opportunity. And it's a phenomenal growth which we have seen in household insecticide. Would you be able to share this growth is more of a pipeline filling or ahead of season loading with a lot of promotions, or it is a natural demand which has come up in this quarter?
Yeah, I think we're happy to report that it is natural demand. It is none of the other things. And frankly, like Samir sort of mentioned, in aerosols and stuff, we didn't even have enough supply earlier on in the quarter. There is a high consumer demand. People do not want to get sick and they want to protect themselves. Samir, do you want to add something?
Yeah, no, so hi Sirish, and just to add and build on what Nisa mentioned, not just for HI but even for rest of the portfolio and entire India business, our primary and secondary sales are mirrored largely. So there has been absolutely no change. In a way, between primaries and secondary, from our end in first quarter. Yeah, so it has been all sort of consumer kind of demand, consumption led.
So, Samir, if I understand correctly, the rural is driven by the burning format, and urban is more of an electric format, which is driven this kind of growth.
That's right. So, as I mentioned earlier, we did see very strong growth both in electric as well as kind of burning format. Honestly, nothing much to pick and choose in terms of growth rate between both the formats. Rural, I would say, it's also alongside kind of burning formats upgradation play, right? I mean, so consumers do, sort of upgrade from incense sticks perhaps to coils and then gradually from coils to, kind of electrics, right, over a period of time. So, that's the other growth vector also. I mean, which is very, very evident.
I think one of the growth,
markets.
obviously, the penetrations of liquid vaporizers of the electrics is much, much lower than the overall category. And obviously, it would be, that would be lowest in sort of rural. And I think one other thing we need to think about is how is electrification also changed in India over the years, and burning formats, whichever ones they are. The main reason for people's upgradation is, obviously the electrics are more put down price, although on a per night basis they work out quite economical if people do want to avoid smoke, correct? So there is a strong sort of upgradation story there, and we definitely, there is a long run for that in rural India.
Yeah, thank you, Nisa. My related question on this, if we have, say, value growth at 27%, how large would be a volume growth in this, in HI?
Well, I think for us, there is nothing much to choose in the last quarter, Shirish, in terms of value and volume. I think, again, value and volume growth would largely be more of the same.
Okay. One question on HI business to Nisa. What is the penetration level and what is the lever we see in terms of penetration growth in India versus Indonesia? And if you can specify what is the penetration level?
So the penetration, I am going to give you the exact numbers right now here. But I think, obviously rural penetration is behind urban penetration. And then, say something like liquid vaporizer penetration in urban India would be much ahead of what it is in rural India. So our business has always been on this coil upgradation sort of business. I think having this new liquid vaporizer in our portfolio was much needed, because I think the efficacy asked from consumers has been going up, correct? They are actually saying we have more of a problem. Mosquitoes are getting to be more sort of resistant. So I think this highly efficacious LV product will sort of let us drive penetration.
And any thoughts on Indonesia?
Indonesia again is it's a similar story, that aerosol penetration would be sort of behind coil penetration. So there's always an upgradation story, and I think in these markets still value for money sort of really matters. So while you upgrade consumers, you still need to give it to them at affordable price, which is what we're good at. Actually, what we're seeing that electrics now in Indonesia is growing very strongly. So that's also a very good opportunity for us.
Okay. My last question on the new products. So not this 1 or 2 quarters. Where do you see these new products? And you really have done a phenomenal work on this. So where do you see these new products maybe after 3, 4, 5 years in terms of size and scale?
Which ones are you referring to?
Say
nature or?
Yeah, nature.
Yeah, I think we see these as extremely big sort of opportunities, correct? And they really the sort of value for money, high on sustainability. They have a good margin to us. So we really feel that there's a very large opportunity to build them out.
Okay. All right. And wish you all the best. Thank you.
Thank you.
Thank you very much. Next question is from Percy Patanki from India Infoline. Please go ahead.
Hi. Just a follow-up from me. Samir, you mentioned that the primary and secondary for this quarter is the same. So if that is so, it means that at the end of March, was your pipeline normal? And if it was normal, then what was the reason that Q4 saw sales decline?
No, so I think Q4, what we had mentioned, if I get it, kind of correct, is we had primary decline of around 17-18% and secondary decline of about 12-13, sort of percentage. I think if you look at our, kind of distributor inventory, I would say it is relatively on the lower side, especially as of, sort of June end, compared to at least what it has been over past, sort of few years. I think the way to also look at, kind of combined quarters, if that's what you are, kind of getting towards, the seasonality, kind of piece attached to the categories, because at times some of the categories are seasonal, and once you're out of the season, customers sort of, don't, sort of come back. Of course, there were, sort of ups and downs in terms of distributor stocks, especially because of the supply chain disruptions, both back end and front end. But we wanted to sort of keep, kind of distributor stock as much low, as we can, which is what we did, as of June end. And if we sense that, the supply chain is perhaps getting disrupted again, we will, kind of be again very dynamic in terms of ensuring that there is no, eventual, kind of sales loss, whether it be servicing to the channel partners or even, to the end consumers.
So, Samir, March obviously was a little lower than normal in terms of the distributor inventory, and you are saying that June is continuing at that low level. So is it that you are comfortable with this level and this is like a permanent cut in the distributor days? Or is it that you haven't got a chance to fill in the pipeline, and therefore in July, August or somewhere in those months, you will actually see some amount of distributor inventory fill in?
Well, I think for us, distributor inventory will be more driven by, if any, supply chain disruptions, especially if it has to, move up from, June end, sort of level, right? So that's going to be the single largest, driver for distributor inventory, say baseline with June level to, kind of move up from here on. As I told you, the distributor level, in June was relatively on the lower side as compared to, say, averages of last, kind of 18 to 24 months per se.
Understood, Samir. I'm just saying that a lot of people are taking opportunity of this kind of disruption to sort of relook at their entire business model. And if they believe that it is possible to sort of do business at lower inventory levels, they are saying, okay, we do not want to fill in the pipeline anymore. Whatever cut has happened, we are comfortable with that level. So I'm just asking, are you comfortable with the June level, or do you plan to sort of take it back to a more normalized level which was there pre-COVID?
No, at this point in time, we are quite comfortable. With June level, also keeping lower distributor stock per se results in a much improved ROI for our channel partners, right? Which is also extremely important in terms of handholding channel partners in such, tough times. So yeah, my sense is, we should stick to, those levels for rest of the year. Unless, we see again, some disruption happening on back end, kind of front end,
Right. And one last small sub-point on this, that while for the overall India business, the primary and secondary were equal, was it different for any of the main categories?
Yeah, I think, there would have been, some mismatches, across, categories, but I would say nothing, too, kind of meaningfully different per se. Even across categories, but yeah, it would not be sort of, exactly mirroring, all the, kind of by categories in which we, sort of play in.
Sure, but nothing to call out.
No, nothing to call out, per se. Nothing to call out.
Okay, that's all from me.
That's Thanks, person.
Thank you very much. Next question is from Sangeeta Purushottam from Cogito Advisors. Please go ahead.
Yeah, hi. Good evening and thanks for taking my question. I was hoping you could give a little bit more color in terms of how you expect the performance of the Africa business to shape up in the months to come, and what are going to be the key initiatives being taken there to turn around the business.
Yeah, hi Sangeeta. I think to begin with, as Lisa was, kind of mentioning earlier, execution is going to be one of the key, sort of focus area, right? And also our thought process is to drive, gradual recovery to begin with on the sales growth. And the drivers to that would be, market initiatives, select launches. I think also one other thing which we should, remember, and that's something which is sort of playing out in June and July at least, is a significant competitive advantage, especially in, dry hair, portfolio for us in multiple, African markets, right? Because the competition over there is more of, import and, sell, in the market, competition, if not totally, at least, some part of it. And their backbone, especially on supply chain, is very, very, disrupted at this point in time. And we are seeing that, getting played out, especially if you look at June, wherein the performance was nearly flattish on sales, as well as in July, wherein the performance was, quite, robust, to begin with. But it's more of, how do we play this over a period of time? So execution to begin with, go-to-marketing initiatives, launches, scale up of, wet hair portfolio, scale up of, household insecticides over next, sort of few years. And that's the way we are. And again, very tight control on cost. So, these are the 4-5, drivers which we are, sort of working on. And that should result, at least, what we think in terms of, gradual recovery, in Africa, US business for rest of the year, and make it, a strong base for us to, take the growth to the next leg over next, few years.
Supply chain of your competitors who are importing products has actually helped you because your supply chain has been relatively intact. So has that helped you gain share? That's one question. And the second thing is, you're talking a lot about the execution challenges, but this business has been in the portfolio for a while. So what exactly have been the execution challenges, and why has it taken so long to fix them?
Yeah, I think to begin with, on your first question, we do have, on-ground manufacturing, setups as compared to a lot of our, competition, which sort of imports, and that kind of is a significant competitive advantage, which is playing to, our favor at this, point in time. I think execution is basically basics, to sort of begin with. It's not that we are discovering it, here and now. We have been, in bits and pieces over past, period also. But there is a renewed focus and more so, very, precise, the do's and don'ts in terms of how do we go at executing a lot of, tactical as well as medium-term strategy, which we have sort of, charted out, on ground, whether it be, go-to-market initiatives, whether it be within go-to-market, say, channel, prioritization, feet on ground, and, stuff, leveraging technology and stuff like that. Or whether it be even, launches, how do we go ahead with some of the launches and pricing and, the margins, profile of it. So it's all that we are sort of, baking in and sort of making it happen, on ground, rather than just being extremely, prescriptive, to each of those, sort of local countries at this point in time.
So I'm actually just trying to link a more before and an after picture. Many of the things you're talking about should be like a normal part of running a consumer business, and I'm sure you're doing a lot of this, in India, in Indonesia, the other markets where you've been successful. So I'm still not getting a handle on what were the challenges. Was it a leadership challenge? Was it an issue of not having the right people in place? What exactly was it that went wrong, and what is it that's going to be fixed now? Hello? Hello? Hello?
Ma'am, one moment. Sameer sir, can you hear us?
Yes, Nirav, I can hear you. I thought Nisa wanted to sort of, come in, but I think she has just got, sort of disconnected. So, okay, let me just take that question, Sangeeta, for you. No, I think, it's a mix of, many things, which we are sort of working upon, having realized, the experience of, past, at least, few years. right? Right from whether it be, kind of sourcing to, kind of manufacturing efficiencies to even, go to market. And again, it's not like everything in one country or, sort of.
What are you all doing? Am I in or no? Yeah, I'm in now. Okay.
Yes.
Sorry. Can I come in? Sorry, I've been trying to get back on this call. So I think the execution challenges, have happened in the Africa business over the last couple of years. I think some of our execution challenges, even in India, have been over the last sort of 18 months also, and we're seeing a turnaround on that. And you're asking, obviously, running a company, we're not sending rockets to the moon, so it is some sort of basic stuff that we've not got, sort of fully right. And I can't, it's a mixture of leadership. It's a mixture of getting your GTM right. So I think there's a lot of pieces to that. I mean, that we have a new CEO in Darnesh Gordon, who, is very experienced on the Africa sort of market, sort of actually tells you about our commitment to the geography and what we should do. So I don't think, look, when, I've been sharing the bad news and stuff, but the bad news has not been there for 10 years. The bad news is from the last, sort of 18 months to couple of years, and we're pulling up our socks, rolling our sleeves and getting it done. And I just, to the best of my capabilities or this company's capabilities, we're not going to now say, oh, COVID came and that means we sort of couldn't grow. So I think the idea is to focus on growth, make sure we're, brutally honest with ourselves about, and it's not that, it's not like this illegal incense stick did happen to us. It is a difficult sort of situation, but perhaps from an execution point of view, we hadn't pushed back hard enough. We hadn't brought our full muscle to it. And that's what we really are trying to do at this time. So I think, some of it might be leadership, some of it might be other things, but I think it's also our attitude at this time is to say, we don't want to externalize things because there are always external issues, including a global pandemic. But, we are a strong company. We have products and categories that consumer wants, and, let's go for growth.
And once you've set the business right, would you be introducing the HI products in Africa post that, or is that going to be in parallel?
It's going to happen. It's happening right now. Like I said, we took it off the slides because we didn't really want to fully tell our competitors what exactly we were doing, but we're at it as we speak.
Okay, great. Thank you.
You're welcome.
Thank you very much. Next question is from Sejal Kapoor from Unseen Risk Advisors. Please go ahead.
Oh, hi, team. Thanks for the opportunity. Most of my questions have been answered. I've just got one, which is slightly medium to longer term. So I understand that as an organization today, our focus is firmly on driving operational efficiencies and on earnings growth. And we got that message in the annual report, and we've been hearing through yourself, Nisa and Samir. So that's very encouraging. And on the back of that earnings growth, hopefully using our better innovation engine that kind of offers or formulates the products that benefits the bottom of the pyramid people, because that's where the majority of our consumers are internationally, and give them those products, superior quality products at a price point which is very appealing. So that kind of gives our business some stickiness. My question mainly is around the return on capital on a console basis. Can it revert back to where it used to be or close to that before we started diversifying internationally? So driving both earnings growth and making the balance sheet leaner, perhaps by sort of faster deleveraging. So what aspirational target do you have, maybe on a 5-year basis, for this consolidated ROCE? Thank you.
Sure. So I think to begin with, we are, kind of quite focused in terms of, driving, ROCs, no targets to be honest, at this point in time. Of course, the ROC as what we see today, which was, around, sort of high teens, is also deflated because of, the capital employed or the capital which you invested, right? I mean, in buying out the business. So operating ROCs, would be close to around 60%, plus. I think what is important to peep into is the levers of ROC, which is, sort of capital employed, whether it be capital expenditure or working capital, which we are, kind of working towards in terms of improving, and as can be seen also in our results over past, kind of couple of years, as well as margins, right? I mean, and margins not just driven by, cost levers, but also margins which are, kind of more sustainable and driven by, kind of sales growth levers. So there is absolutely a big focus in terms of driving, kind of ROCs, kind of up, pressing upon, some of these growth levers as well as reduction in working capital.
So that's helpful, Samir. Just to clarify, so directionally, our aim is to drive the margins upwards. We, of course, cannot quantify what that number would be, let's say 2025, but given the fact that we accept the mistakes and we are putting in place the remediation plan, and the message was very clear even on the annual reports and several places, directionally I think come 2025 it should be a much better and leaner business. Is that the message we can take away?
Absolutely.
Okay. Thank you so much and all the very best.
Thank you very much. Ladies and gentlemen, that was the last question for today. I will now hand the conference over to the management for closing comments.
So thank you all for taking the time out for the call. In case of any incremental questions or suggestion inputs, feel free to revert to any one of us within the investor relations team. Thank you so much.
Yeah, big thank you for being with us on the call today, and we look forward to continuing talking to you, and please stay safe and stay healthy. Take care.
Thank you very much. On behalf of Emkay Global Financial Services Limited, that concludes this conference. Thank you for joining us. You may now disconnect.